When you click the website ForexFactory.com, this is where the website will take you to. And another website you can use for this fundamental to know what is going on in the fundamental world is investing.com. You can also use realtors.com and bloomberg.com, but the common one and the most popular one is the ForexFactory.com. So when you click on the website, then it comes to calendar. So this will show you all the economic activities of the week, but some might not know how to do the settings to be able to bring them back to some might not know how to do these settings to be able to show them what is going on in that particular week. So if you don't know it, just click here, then you can set the date range at this particular area. So let's say this is September, so you can set it to know the economic activities of this September to 31st of October. Then you apply the settings. So when you do that, it will show you all the economic activities, all the fundamentals between that range that you applied there in the settings. So but you want to do it in such a way that each week you want to know, from Monday to Friday, you want to know the activities of that week alone. You are not concerned about next week or what is going to happen in the upper one. So you just want to relate what happened in the previous week to this week and be able to gather more insight so that you can incorporate it into your technical. So as today is September 5, so Monday is September 4 to Friday, that is September 8. So that is what you apply here, so as to know what is going on this week. Then you do what you apply setting. As you apply this setting, as you all know, this is it, and this is the news they are going to release tomorrow. We have 2:30 a.m. Nigerian time. They are going to release the GDP out of the Australian dollar, the rate statement out of the Canada, and the trade balance. Then on Friday, we are going to have the Bank of Canada speech. So this is the week. And then if you want to go to last week, you don't need to click this back. No, just apply the settings, then click this. It will take you back to the previous week, that is from August 30 to September 3. Still click it. It will take you back to 2 weeks before, so you know what happens 2 weeks before, then the week after, then probably this week. So that's how to set the ForexFactory.com to know what is happening in at that week. So each week you know what is going to the activities they are going to drop each week. And another thing I want you to know is that you can also edit this one also to be able to give you the high impact and the medium impact news. These settings, I've made these settings for this to be able to show me the medium impact, and then the one in red, the high impact news. So if you want to do that, this is where you come to do the settings. So if you don't want it to show you all the economic activities of all the currency, you just tick the currency you don't want. You remove the tick from the currency you don't want here, then it will show you the ones that you ticked only. But as a trader that trade most of the currency or all the currency pairs, then you need to tick everything. But let's say you only trade US dollar, and then let's say you only trade GBP USD, so you just untick everything here, you remove it, then what remain is GBP USD, then you apply the filter, so it will only bring any news relating to GBP and then US dollar. But as a trader that trade everything, most of the currency, then you do what, you remove this, you tick this so that you can see the activities of all the currency. And this one too, if your own is to just know what is going on in the inflation or in the consumer survey or in the central bank, you just remove all this, then only tick the one that you are interested in. But as a trader that want to know everything that was going on in the economic worldwide, either the bond, either the employment, either the inflation, you do what, you tick everything. Then let's come to here, this place, this one in This one with ash color, this sign with ash color shows the no impact news. No impact news mean news that doesn't have any impact, that if they release it, it won't affect the market. Why this yellow signs mean the low impact, which means that it will have impact, but the impact in the market will be very, very low. You understand? And this brown one is the medium impact. That is, it will have impact, but it will have impact more than the low impact news. And don't get me wrong, sometimes this indicated with yellow will have a big impact than this one. That is, sometimes it do happen in the market sometimes that when they release a fundamental like that, in this with this yellow indicator, it will still move the market. You will see the impact than this, but it's uncommon, very, very uncommon. This is a medium impact news, and this is a high impact news, a very, very high impact news, a news that creates volatilities in the market. So this news creates, these two, the red and the brown, creates volatility in the market, while we have a low volatility and no volatility news. But this do create volatility sometimes, and it's very, very rare to see. You can also filter the information here by clicking by unclick it. Like you might unclick the low impact news and unclick the no impact and the low impact news, and then click this medium impact and high impact news. But if you want it to show everything, just click it and apply filter. It will show everything for you. That is from Monday to Friday, all the low impact, the no, this no impact, this low impact, and this medium impact news, and then we have the high impact news right there. But personally, what I do is that I filter it for it not to show me the low impact and the no impact news, so that I can see the bigger picture of what is going to happen that week. We have the actual news, we have the forecast, and then we have the previous news. So this previous news is the previous release of that news. This previous is the news that was released before. Let's say they usually release CPI year over year. Let's say they usually release it every month or every year. So this particular one is the one that they released the last time, and then this is what the market anticipates, what the market forecast they will release. And then 5.4 was released previously, and market forecast 5.2, and they actually released 4.9. You know, this is lower than expectation result. How does market react to this news? To my own explanation and then observation, when market is anticipating a slowdown, it will, when a particular pair is anticipating a slowdown in the economic activities of any kind, maybe CPI, maybe GDP, maybe the interest rate or the unemployment thing, market will take it into consideration, and the market participant will be reacting to the forecast before the actual news. Most of the time, not all the time. Most of the time, market will react to the forecast before the release of the actual news. Let's say on AUD pair, let's say especially AUD USD, before the release of this news, the previous is 5.4, forecast 5.2. It means that they are predicting a slowdown. So probably AUD USD might be in a downtrend, but will lack momentum, but will just be going from lower low to lower high, creating a new low. Probably maybe in the 5-minute time frame you'll see this, or 15-minute time frame prior to the news. So after the news and the actual is now slower than even expectation, then probably that's when you see the market will just move to the downside in a volatile manner. So that's it. But if they now predict a slowdown, and when they release the result, the market comes out better than expected, it means that the news is shock to the market. So it's a shock news to the market because probably they've already predicted the slowdown before, and then we have a surprising result. That is when we'll see a spike, a volatile spike to the upside that will be more than this. It will be more than, like, let's say 2 times more than this movement to the downside, because market is already pricing the slowdown already. It's not something that is surprising to the market, that surprised the market. So market has already priced itself that okay, this particular news is going to be negative. That is that. Let's now come to this euro flash CPI year over year. Let's say this is the previous, this is the forecast, and then this is the actual news. And note that if they want to release a news, if no matter the number, don't check the number, though you check the number, but sometimes numbers can be deceiving. What you have to check is, after release the news, what is the indicator of the news? This one, the indicator is red, meaning that it is a disappointing news. This indicates a green, meaning that it is better than expectation news. This comes with a black indicator, meaning that it is, most of the time, it is the same news or the same result as the market forecast. You understand? It means the same as forecast. Let's say 5.3 here and 5.3 here. That is, it means that what market participants anticipate is what they dropped. That is why you see it indicating this black color with the previous one. So this green mean better than expected, this red mean disappointing, and this black means same as forecast. So I think that one is clear on its own. So let's go back to what you can be expecting after the news is dropped. Let's come to this Canada GDP. Let's say as you can see here, the previous is 0.2%. The forecast is minus 0.2%. And then the actual result is minus 0.2%. Another thing you have to know, that if the market forecast is the same thing as the news they released, that particular currency, depending on what they dropped previously, 0.2 is higher than minus 0.2. So let's say this is what they dropped previously, and market predicted a slowdown here. You know that this slowdown might have been priced into this pair. Let's say this is Canadian dollar. Maybe you find another weak pair or a very strong pair. You find a very strong pair to trade with the Canadian dollar. So when you find a very, let's say GBP is strong, and then you see something like this, that okay, there's going to be a slowdown in the GDP from 0.2 to minus 0.2, and they have not yet released the news. This actual is not there. So you find a very strong pair and trade with this weaker pair, you look for a potential buying opportunity in GBP card, because you know that Canadian dollar will be weaker unless this news come out better than expected, better than expectation. That is when DBP Canadian dollar will not be buying again. Then that is when it will be selling. Instead of the weakness, a Canadian dollar might look out for strength in that particular pair if this news come out better than expected. So I just use pounds as an example. Like, let's say if the pounds is strong and you see that this card is weaker in respect to what the market forecast that they will drop in the GDP, because the GDP might actually slow down. So the market might have been pricing this on the chart. You see it before the release of this news. So if they now release the news and come out as forecast, minus 0.2 is lower than 0.2. So it means that more weakness will come into this particular pair. Let's say you are trading DBP with it, then you see more volatility to the upside in that particular pair, because market is has anticipated slowdown before, and the forecast is now exactly what market is anticipating. You get that right? Okay, let's go to this US dollar NFP. Probably the previous one is 157,000, and market predict that what they will drop in job number this month is 169k. It means that market has already priced this, that the number that will be dropped this month will be higher than the one that it dropped previously. You started seeing sign of strength in the US dollar at this moment, because market has already predicted that the NFP the number will be much than what they dropped previously. At the end of the day, they predicted 169. They still dropped better than expected result of 187k. So this kind of market will bring a lot of volatility, and market will do what? Market will rally to the upside. If market has been moving to the upside in a low volatility form, after this better than expected result, then you see market start going up with a momentum, with a lot of volatility. But if we now have a lower than expected number that is even more than this 157k, it means that news is shock to the market, and you see a very big fall with a lot of momentum that is much more higher than the momentum you can see after this result. It means that if the market now go below this, then that's where you see a lot of momentum, a lot of volatility to the downside, and it's always be like spike to the downside, because they are not expecting it. The expectation was the numbers will be more than the previous. I hope you understand this explanation. If you don't understand, you can actually put your comment in the comment section. I will read, and then I will actually reply you. Any question you have, I will reply you in the comment section. So that is the two. I talk about number one, anticipated news, if it come out better than expected, but you have to check what they dropped previously, if there's going to be a slowdown, and if the slowdown actually occur, it means that the pair will continue to be weaker. So let's use this scenario of this Euro CPI, and most of this news that created volatilities in the market are the one that are indicated with red or brown. That is the high impact news or the medium impact news. The low impact news to do, but it's once in a while. You understand? So let's come back to this ISM manufacturing PMI on the US dollar, and I will show you how this affects in the financial markets. I'll show you how it affects the US dollar. This previously is 4.64. That is the ISM manufacturing PMI on the US dollar. And the forecast is 46.9. The forecast is actually 46.9, right? And the actual news is 47.6. So when you see this previous news as 46.4 and market participants are forecasting 46.9, they are expecting the ISM manufacturing to go up, right? So markets will be pricing this, and then before the release of the news, US dollar will be strong but with little volatility. So if they now drop the news and the actual is now better than what they are expecting, better than what they are expecting for 6.9, then that is when you now see volatility coming into that pair, and it will buy massively if it's a base currency. So on this ISM manufacturing PMI, let's check the market. And this, in terms of the unemployment rate, this is where you don't have to focus on the number. Before we go to the DSY, let's check this unemployment rate. The previous is 3.5, which means that the number of people that are unemployed is low. They are 3.5, and market still priced that the number of people that are unemployed is 3.5. It should be like the previous released, that nothing has changed. And at the end of the day, it comes out disappointing that people that are unemployed are up to 3.8%. They've added 0.3 in numbers, in percentage. So it means that they are now 3.8, not 3.5. This kind of news is from 3.5 to 3.8. If you focus on the number, you'll be like, okay, 3.5, 3.8 is bigger than 3.5. Then you might want to say this is a good news, which is a bad news. That's why you have to look at the indicator that it is actually indicated with red. It means that it is a disappointing news. And this green, this one that are indicated with green, is a better than expectation news, and the black one are as forecast. So those are the indicators of this news, and this how to read the ForexFactory.com. So let's now get to the ISM manufacturing PMI that we are getting into. And as you see, as they release these unemployment rate, that is last week Friday, we have the non-farm employment thing coming better than expected, and then hourly earning coming lower than expectation. Market has already priced this down. Okay, early hours on, let's say Friday last week, the US dollar is weak. Early hours on Friday, before they release these unemployment rate and then hourly earning. So after they release it, it become weaker. But some hours after, then they now release the ISM manufacturing PMI. That is when the momentum come back to the US dollar, and then we have a strong US dollar that closes above the open with a lot of volatility on that day. So this is the example. I told you the market has been pricing the our average hourly earning and the unemployment rate early hours of Friday before the drop of the NFP. As you can see, this is Friday, September 1. So as you can see, market has been pricing it, that is the US dollar is weak before the drop of even after the drop of the before the drop of the NFP, right? So before the drop of the NFP. So when they now drop the unemployment rate, and then the next one, which is the non-farm implementing, this is actually a mixed result. This one came back better than expected, and this one comes out disappointing. So market actually price the non-farm implementing, which is the real NFP. So that's when we have a buy at this particular area, then US dollar is strong at this area. So hours after, then let's say after 1 hour, this candle is for 2 p.m. and this a high volatility candle is for 3 p.m. So let's check what happened at 3 p.m. So 3 p.m. is a drop of the ISM manufacturing PMI, which comes up better than expected, and the ISM manufacturing price, which comes up better than expected. So you see that after this after the drop of this one, you see a big volatility move in the pair, as you can see, 1 and 2 to the upside. That's this 3 p.m. candle, and that's 4 p.m. candle. So that's to tell you that is how you can incorporate the technical analysis, the fundamental analysis into the technical. So after the drop of the ISM manufacturing PMI that comes up better than expected, you see that you have this high momentum candlestick close to the upside. You have a lot of volatility, and the price move to the upside at that particular level. So I believe you understand this explanation, how to read the ForexFactory.com is not something that is very, very hard. So after you check the pairs, the actual currency that want to drop the news, when you compare the previous, the forecast, and the actual, you feel that it is a slowdown. That means that particular currency, depend on the news though, so that particular currency will be weak. So you just look for a stronger currency, then you pair it together, then use your technical skills to look for entry in your chart before the actual. And if the news comes out disappointing, then you enter. You understand, you look for entry, then you wait till the release of that news. Then if that news actually comes out slow, let's say they are expecting a slow result, a lower than the previous result, so you just anticipate it, look for another currency to pair with it that will give you a very good risk to reward. So when you pay it with that particular currency, then you wait for the news to drop. When the news drop, if it is let's say with the expectation that okay, it will actually slow down, and it slow down, it comes out disappointing as expected, you understand. In a case of this scenario, it means that you are going to find entry based on the weakness of that currency. So it means that you are pairing the particular currency with a strong currency, and you are looking to buy another currency in respect to that currency. Let's say at this area you are willing to buy TPP USD for that short period of time before the drop of the next one, which is the ISM manufacturing PMI, if it comes out better than expected. So you incorporate the fundamental to your technical. So you use technical for entry, and then you use the fundamental to find a trading opportunity. You can actually look, let's say today we have the unemployment news coming out better than expected, and then we have this let's say AUD CPI coming out disappointing. So you can actually pair AUD US dollar together. So it actually means you sell AUD USD at a particular time. You use your fundamental skills to look for entry where you enter, and then you go for a good risk to reward. That's how you become profitable in the market. So as a trader, I advise you to always incorporate fundamental into the technical analysis to have a profitable setup. I hope you learned something today. So if you like this and if you find this valuable, click on the thumbs up button, subscribe, and then let's air out your opinion. And then any question you have, let's you can put it in the comment section. I'll be willing to answer other question in the comment section.